Hey guys, it's Max. How's everyone doing? All right. Did everyone see that Defiance announced dividends? Yep. Let me get a Coke going here, or a seltzer, or whatever. All right, let's check this out. Oh yeah, I might want to share the screen, right? Yep. Hey, we'll also look at some other stuff tonight. We'll also look at a buffer report and one or two other things. Talk about tomorrow, maybe. Big number coming out in the morning, I believe. CPE or something. Oh, I got my ratty looking hat on. Oh, my hair doesn't look much better, does it? All right, it doesn't even matter. I wanted to come on live and do this and report on this number. Okay, as you guys know, I am now a shareholder too, or this is actually my second dividend I've received. I've been a shareholder for 2 months of IWMY, 100 shares of triple QY, 100 shares of JEPY. So the dividends weren't great this month. So that's the bad news. That's the bad news. The dividends were less than last month. All right, so let's just look at these one at a time. All right, 71% was the number, and that's the pretty consistent number. 91 cents. Remember, I was apologizing for how low it was, and I was saying I can't believe it's so low and there's got to be something wrong with it. And I found a couple of errors, and I think after the errors, I got it up to like 88 cents or something. I don't even remember. Let's take a look real fast. I didn't make any slides yet. 88 cents. Okay. Didn't make any slides. I just wanted to come on real fast and give you guys the deal. Like I said, didn't brush my hair, didn't take off my ball cap, didn't do anything. But anyway, all right. Well, I'm pretty impressed with that. 3 cents is very good. I didn't think I would be that close on this one. Okay, so on JEPY, I had 59 cents. Okay, so let's go over here. How you guys doing tonight? Everyone doing well? 55 cents. Okay, I'll take that. That's within a nickel. Hell, I mean, I'll take that every time. In the other one, I got really close. I didn't think I'd be close at all on IWMY, but okay, I'll take that. So 55 cents. But payout wise, being a shareholder, I'd rather have 76 than 55. So this is actually my third dividend payment too. It seems like I just bought those yesterday, but I got them before SPY T came out. And to be honest, I probably would have got SPY T instead of JEPY. Not that JEPY is a great fund, just because I love the idea of SPY T, and 20% is enough income for me. So one of the most important rules about these funds, and this the one that is most often ignored, is you have to need the income, not want the income. If you want the income because you want to drive a Lambo, you want to get a better looking, girlfriend or something, I get that. I do too. I don't want a Lambo, but I'd take a 911 maybe or something. But these funds aren't the way to get that. These funds are for an income after you've already achieved that level, in my opinion. If you're trying to get to that level, growth assets are your ticket. Like all these guys around Austin driving Lambos, I bet you anything they all made it in Facebook stock, Apple stock. We have a lot of systems engineers around here, and we have a lot of major tech companies. And there's every other guy running around my grocery store, is probably making 300,000 or 400,000 writing code all day. or we also have a lot of, executives. Austin's turned into a hub for everything. We have all kinds of people here. I meet people from all over the world. All right. Well, anyway, 55 cents. That's not bad. Let's go on and do the other one. Sorry, I got off track there. Let's see how close I got on triple QI. But seriously, the needing income is the important part. If you need the income, something like this, or a bond fund, or a REIT, or a real estate investment can be a good thing. If you just want income because you want to be richer, go out and work harder, or get another job, open another business, do something that's like a growth asset, or buy growth assets. I think that's going to give you a better chance to acquire the large amount of income. That and just years of hard work. All right. So triple QI is 63 is the number, the percentage, and in other words, these don't make good trading vehicles. Even though I have seen people trade with these and making tremendous fortunes or tremendous amounts of money, not really trading with them, but just playing them in a bull market, and the NAV of these things are going up, a lot of these, at the same time that you're getting insane dividends. So in a lot of these. All right. 80 cents. Okay. Well, let's look at the old spreadsheet. Oh, look at that. 81 cents. Oh my gosh. Okay. Well, I'd like to say I'm getting pretty good at this, but this is easy. It's mechanical. This isn't, like I always say, I didn't even make an estimate. I'm just using the number. It's a calculation. Okay, now get this. I swear to God, and I thought I showed it to you guys. I thought I looked over at USOY live, and I said, I don't think they declare yet. And I swear to goodness, I pulled up the USOY site, and it said declaration day, and it wasn't until next month, I thought. They did declare today. Okay. So anyway, let's see what I would have picked, because like I say, this is not an estimate. I'm not guessing or estimating. This is a calculation. So let's go see what the calculation said. So we pull up USOY. Okay. Now the number on the right tries to extrapolate it over a whole month, and it doesn't know that this started in the middle of the month. This hasn't had a full month yet. Anyway, so the number on the right, just disregard it. But the number on the left is just the raw number of how much extrinsic we've taken in so far to date. 81 cents. I believe they paid 79 cents. So had I guessed, this one would have been right on also, or would have been off by 2 cents. So we'll keep keeping track of USOY. We don't have to keep track of the other one. It pays 20%. SPY-T pays 20% every time. TRES, yeah, I don't know about TRES. But anyway, we don't have to keep track of SPY-T, but this one will start keeping track of it. And this one, golly, this one's going to be better than I thought. I guesstimated, maybe it'd pay 40% or something. What did that actually come out to? They don't have a calculation yet, probably because there hasn't been enough time. But oh yeah, because it's not really a month. You'd have to figure out how many days. Okay, well we could do that real fast. Let's just do that in our head really fast. So how many days does that look like right there? I'd say about 10. Was that 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 2. So 2 weeks, or it's actually 14 days, which is 3 weeks. So 3 weeks is 3/4 of a month. So, all right. So we just need to turn it into a month by multiplying by 1.33, 1 1/3, right? I think that works. So if we did that, multiply by 1 1/3, well, let's just call that 100 or $1. Well, right, because 71 cents, 1/3 of 71 cents, we'll call that. Yeah, just call it $1 without even thinking about it too hard. All right, so at $1, because it makes the math easy too, on a $20 fund, $1 a month comes out to $12. So that comes out to 60% a year. So I guessed 40 initially. I told somebody 35 or 40. In any event, I'm glad I was wrong about that. The good thing about this one is this, in times of economic uncertainty, when the oil market goes crazy, hopefully this fund can monetize that. And hopefully this fund might be doing better when maybe some of your other investments aren't. I really, really like this fund. I really like SPY-T, and I cannot believe I bought 300 shares, about 100 shares of the funds before this one came out and before SPY-T came out. Because if it were today, I would get 100 of SPY-T, 100 of USOY, and then 100 of QYYY, or maybe IWMY, but 100 of one of the other ones. I like the other ones, and I love QYY, as you guys know. I'll take some questions here in a second. I thought maybe we could look at the buffer report and just kind of see what's going on. But anyway, I'm going to look. I'm going to check in and see if any of you guys are asking any questions yet. Hey, what's up, Brandon? Let's put a little banner on this thing, a little disclaimer, try to get some money in. All right. Perfect. All right. Who else here? Brandon, I appreciate it. Yeah, you're welcome. Okay, I had not heard that, John. They came out with the Russell. Okay, I've heard they're coming out with it. I heard about it yesterday, but I had not. It wasn't on the websites yet. Oh, they will come out. Yes, they will. Now, I have an interview with Sylvia Jablonski that hasn't aired because I screwed up and forgot to record it. She said she kind of implied they're waiting on to see how SPY-T does. Kind of like it maybe wasn't doing as well as, she kind of implied it hadn't been doing as well as she expected or something. Or she kind of almost sounded like, well, you guys need to buy more SPY-T if you want this other one to come out. She didn't say it like that, but they're using SPY-T as a precursor. But I asked her, I said, well, what about, I called it RUT-T because it could be RUT and then Y, Ruddy, or anyway. And I said, I was asking her about the Russell version of it. She said that actually a lot of people, she didn't think they might not do that one. A lot of people like the Russell one as is. She was acting like with the pros, that's her most popular one, probably because it pays the most. But people like it, and they like to get all that income and distribute it themselves, I guess. So anyway, she kind of hinted that we weren't going to have one like that for the Russell, not anytime soon anyway. And on the NASDAQ, she kind of acted like we need to buy more. So, yeah. Okay, so what's going on with Round Hill, John? What are you saying you want? Oh, you want to get some Round Hill? Yeah, the weekly, I just don't need a weekly. I just don't need a weekly checks or a weekly deposit. I guess I don't know. I'll tell you this too. I don't think their returns have been as good from what I've seen. Their returns haven't been as good as JEPY and QYY and yet. Now, I know that Round Hill does it a little bit different, and they do their options. Instead of doing it at the end of the day, they do it the very next morning. So what that does, all night long, Round Hill is uncapped to appreciate as much as possible. So if we get into a market, this is usually a bull market, where you go up a lot overnight. And, we're just generally, when you're in a bull market, you're going up all the time. But anyway, so a fund like this in a bull market should do better on the NAV because the way Defiance does it, they sell the option right at 259, right before the end of the day. The thing is, though, the options that Defiance sells at 259 are about 50% more money. You get paid a lot of money to take that overnight risk. By the time the next morning comes along, sure, the market may have moved in your favor, and that's great. The trade-off for that is the volatility shrunk out of the premium shrunk out of the options. But for one thing, there's not as much time left. There was 24 hours left when Defiance sells it. Then there's 8 hours left whenever Round Hill sells it. And I'm not knocking Round Hill. It's two different strategies. I think Round Hill could do better maybe in certain types of markets. But so far, what I've seen as far as Round Hill's ability to pay, they pay about 50% less because they're making about 50% less. Instead of making 60 or 50 like QYY, they're making 35 or something. So like I say, that's not a knock on Round Hill. Maybe somebody could say, but hell, they make up for it because the NAV goes up overnight and stuff. And I'm open to suggestions on that one. All right. So let's see. Let me try to answer these questions. Okay. Let's see. Hi, I'm worried about NAV depletion on triple Q. I'd like your feedback. Okay. Well, that's kind of that's an interesting subject. I don't really the NAV. That's kind of a misnomer. All NAV depletion is, what causes NAV depletion is dividends. And the bigger a dividend is, the more the NAV depletes, because the NAV depleting, the depletion is the dividend coming out of it. So if you want a high yield stock, that pays 50 or 60%, you're going to have that same amount of NAV depletion. So it comes back to anything else like in the stock market. You have to pick better stocks than the other people. Then that's how but anyway, so yes, NAV depletion, but okay. So yes, NAV depletion is, but it's not like it's not something to worry about. Absolutely. What I would say is the way I deal with the NAV depletion is I only have 100 shares of that ETF. And I would never have more than, 5 or 10% of my portfolio in any one ETF or any of these high yield funds. They're kind of risky, but but they're rewarding too. So I really wouldn't worry about the NAV depletion that much. The way I also deal with it is I reinvest 2/3 of the dividend. So like when I get this dividend, when they pay me, let's say the check's for $100, just to make it easy, or when I don't get a check, but if it's $100 dividend, and I'll make a show on how I do this, I will drip back into the fund 2/3 of that on all three funds. And anyway, so what that'll do, and then as we know, also the price drops on ex-dividend day, so I'll buy some more shares at the lower price. It'll bring my price down a little bit, but that stops the depletion. That stops my account from depleting. We can't do anything about the NAV depleting. The NAV is just a price on a chart, but we could stop our account from depleting by how we manage it. In any event, though, but yeah, in other words, though, if NAV depletion is something you're worried about, I would say make sure you don't have a lot of, don't be all in on these things or anything. And also, these are better for people that are retired and that already have made a good deal of money. These aren't a great way just to play the market. But anyway, but some people, I know young people that are doing it and they're making money. I mean, but it's just, these will be fine as long as the market keeps going up. It's like anything else, though. These investments are tied to the market. So, as long as the market keeps going up, everything's going to be great. All right, Ben, what's going on? Okay, if you were spending on margin, the round hill ETFs would be good for paying your margin down weekly. Yeah, I mean, I'm with you on the weekly compounding of stuff. And and also if I had a really hot another investment I was trying to get money into or something, I mean, the weekly compounding, I mean, yes, I'm not saying I'm against it, but I'm just saying I'm fine with monthly. But yeah, you make a good point. All right. So, all right, Rossi, what's going on here? You notice the triple QI's assets under management been declining since March. Let's take a look at that real quick. I haven't noticed that, but I don't doubt you. It probably has been. Oh shoot. I did something in my spreadsheets the other day. I had someone helping me and they hid the rest of my spreadsheet and I don't know where it went to. Let me see here. Yeah, I don't have anything before. Where did she put that? Well, I don't know. I'll look some other time. But anyway, yeah, possibly it has. So, okay, JEPY, I always have the assets under management right here in this column, P1. But then also the assets under management are also under here under fund size. And so you can see in the past month, and this is on JEPY, it's been 130 million, 120. This one's been steady. We'll just look at what we can look at. On IWMY in the past month, the fund size or AUM has been 158. And then actually people jumped into it and drove it up to 168. Okay. Well, this one paid the highest dividend, so maybe people were getting in to try to get part of the dividend because, I don't know. All right, so then let's look at the triple QY, which is the one we were talking about. The question was for fund size. Okay, 266. I'm showing 254 now. So yeah, just in the past month, some money's come out of it. I'll keep an eye on it. I don't know where the rest of my spreadsheets are, but wherever they are, I'm sure they're safe. It's nice not to have to load the page every day and to have to mess with scrolling and scrolling and scrolling. All right, what else is going on? Let's see if I got any other questions. Good evening. How could you explain? Okay, yes. How can I explain the after hours difference? Okay. Yeah, I think let me think about that. Okay, I got a couple things. First of all, after hours is really illiquid and thinly traded, and it's probably without researching it too much, it's probably just a wide bid-ask spread on one of them. Maybe that's one thing. The other thing it could also be is what I was just saying. Okay, so these guys, yes, they track the same index, which is the SPY or the SPX. Okay, and they track it by they track it by selling an option. One does a call, one does a put. It's not important, but they track it by selling an option in a bullish manner. But they track it by putting on a bullish option trade. Let's just say that. Okay. Well, the bullish option trade makes so XD So if the market's gone up overnight, XDP round here will profit off that. So what I'm thinking is maybe if the market's moving hours, other traders know this same thing. And that's why one of them was up and one of them's down, because they're factoring in the same thing, that one of them is going to monetize the change. And one of them, it actually hurts. It kind of actually hurts SPY T, because SPY T sells their options right at the close of the day. So then if the market blows up right after the close of the day, boom, they're capped all of the next day and their strikes blowing through. So maybe that's what happened. Maybe the market was blowing up after hours or something, and traders were trying to take advantage of that phenomenon. That's my best guess. Or it could be an illiquid option thing. Or it could have to do with illiquidity. After hours, I never trade after hours, but I'm friends with some people in Discord that trade after hours, and some of them do pretty darn well. So, but anyway, I appreciate you guys being here. Let's look at the buffer report real quick. If you guys have any other questions, put them in there. I'll catch it. But let's look at the buffer report and talk about some of these funds. Okay, I got a question. Somebody asked me, and hopefully it's one of you guys that's on here. Somebody asked me what's going on with what's it called? AIYY or whatever. And I really hadn't thought about that in a while. And I think it looks like it dropped off of my darn buffer report. Somehow it fell through the cracks. Oh gosh, that's probably why someone said something about it. Did any of you guys have AIYY or whatever? I mean, AI is definitely, definitely a growth business. I just I'll put it back on if that was one of you that asked that question. Yeah, I'm sorry. It used to be right. It used to be on this sheet somewhere. Let's just do it right now. So I never know. That's kind of one that I don't really follow that much. Let's we'll put down here between NFLP and TSLP maybe. AI. What was it? Is it AIYY? Is that what it is? What the parents calls AI? Anyway, it'll start showing up tomorrow. I apologize that fell off the list. Somebody also called me, mentioned about ULTY. Said, why aren't you showing ULTY anymore? And same thing. It's somehow when I was readjusting the charts, ULTY fell off the list. ULTY is now back on the list right here. And IW, or the other one I just put on here, AIYY, it'll show up right there. It's just not computing yet, but it's back on the chart. Okay. Well, anyway, I've been wanting to revamp this buffer report for a while, and I was going to do it last weekend, and I kind of did some of the stuff. I made some changes, but not some other ones. In any event, I'm going to try to revamp it, go ahead and revamp it all the way this weekend. Let's look at what happened. I did notice that MRNA had a good day. Moderna outperformed, or Moderna outperformed Moderna. You look at, Pi did really well, almost outperformed. All right, let's see who's the best, the naughty list. I mean, I guess maybe Fibby, but I mean, Gooey. I mean, Gooey's kind of perennial naughty list material. The way I look at let's look maybe at the market real quick, see what the market's doing. Then I can let you guys go. If there's no questions, I'll check in a second. Okay, so I appreciate you guys being here, though. And I was kind of happy that I got those estimates pretty. Or like I said, I'm going to quit saying I got them right because I didn't do anything. No, they're just numbers on a spreadsheet. But I think we have the formula figured out. I think we got the formula figured out now. They're close enough anyway. Pretty darn close. All right. I was really happy that USOY would have been right on the money had I guessed it. I was just guessing whatever was in the left column, because the right column just changes it into a month. And that feature wasn't even working at the time. So, all right. Here's a 24-hour chart of the NASDAQ. Okay. Well, it kind of concerns me when it trades outside of the Bollinger Bands and picks up momentum, and that's kind of what it did this afternoon. So anyway, we'll see what happens by the morning. There's a consumer CPEs coming out, consumer price. We'll look it up in a second. All right, here's 24-hour S&P. Same thing, and it's not just today. They've been getting outside of the Bollinger Bands and trending down for a couple of days. So it's the market gave me a warning. I didn't get a put until today. Gosh darn it. I got a put like at, 10 o'clock or something. It went down after I got it. It kept going down, but then it rallied at the end of the day anyway. I don't know why I didn't get it yesterday or last week. I kept thinking it was gonna bounce. All right. Here's 24-hour chart of the Russell. Okay, now Russell's a different story. I mean, I should have got a put on the market in a call on the Russell, put on the NASDAQ, call on the Russell, pairs trade. It could have been making money maybe on both of them. All right. USO. So this is the oil index. Now these guys, the dividend equated to, I did a really quick thing and I came up with, what did I come up with? I already forgot. 60%. Okay. Well, we have been seeing some oil volatility lately, up, down, up, down. Anyway, so that doesn't surprise me. I bet this could get really quiet during quiet, peaceful times of deflation when the economy is going good. I bet this one pays about 20%, or, but I bet this whenever you have a world war, brewing in Europe, like we do pretty much, or the start of one, this is going to keep paying probably pretty gosh darn good dividends. All right. Well, you don't want to make money off other people's misery, but I mean, all right. Here's TLT. This is a 20-year bond. That one's kind of boring. Let's look here real quick at the single stock ones, and I'll check for questions. I mainly just check out Coinbase and Tesla and the ones that most people trade. Okay. So these guys, their options are they still have plenty of upside, 1 day left, and they aren't anywhere close to capped. Same thing with Tesla. They aren't anywhere close to capped on their bullish option positions or on their bearish option positions. They're right here in the perfect spot. NVIDIA, oh my gosh. Now NVIDIA, got outside of the Bollinger Bands. That's an example. got outside of the Bollinger Bands, and then it's now picking up momentum. That's how trends get started. So anyway, we'll see what happens there. NVIDIA has this huge open gap to fill, and so I'd be watching the 1,065 level for tomorrow, because that's the number that it needs to get to fill that gap. And if the bears will probably try to push it there. And if you're a bull, maybe that's where you start looking at maybe thinking about buying it, depending on what happens when it gets there, right? Okay. Here's Mr. Misty. Gosh darn, you want to talk about some momentum. I don't see how they were down 4.8%, but Bitcoin's is actually up 2%. Usually they just travel right together. Maybe something bad came out. Maybe they must have had earnings or something. Anyway, I always show Amazon lately. Now, Amazon had a bull wedge that I've been watching, and it broke it, and it got above it, and I thought, okay, it's back testing. We're going to rock it. Yeah, not so fast. Unfortunately, it went the other way. Hopefully, it'll turn around here soon. Okay. I'm sorry to talk to you guys' ear off. I appreciate you guys letting me talk about stock charts. I love to talk about stock charts. Let's see what else is going on here. All right. Okay. Did I already answer this question? Oh, yeah. I think it's because one of them is capped after hours. Without being too technical, one of them is capped 24/7. One of them is uncapped only after hours, only between the hours of 4 and 8 in the morning, 4 at night and 8 in the morning or whatever. So I think we might expect to see this lots of days, you know. Well, I'm going to start watching for it. Anyway, that's a good eye that knows that. Hey, Retired Cop, I appreciate you for getting on. You didn't miss much. I just talked about the dividends. You were on my dividend guessing show. My guesses were pretty close. I missed one of them by 3 cents, one of them by 5 cents, and one of them by 1 cent, I think. But I appreciate you being here, but it hasn't been you haven't really missed that much. I've just been talking about stock charts. All right. Let's see. How would you compare FEPI or YMAX or YBAG in terms of both NAV appreciation as well as distributions? You had FEPI one time and sold to YMAX, but now you're thinking switching back to FEPI. Okay. Yeah. I mean, FEPI and YMAX, you know, they're pretty darn close to each other. And I don't study YieldMax ones that much. I like the Defiance ones better. So I know that FEPI's really good. I know if I could only have 2 of them, it would probably be FEPI and a JP Morgan one. So, I mean, I don't know FEPI, but it would definitely be the JP Morgan one and possibly FEPI. FEPI's darn good. It might also be SVOL. So all I know is any of these funds are subject to the market going down. The NAV appreciation is really kind of a little bit of the NAV decay or erosion's a little bit of a misnomer. They're all subject to it. It's not like you can tell by looking at a chart. Some people think FEPI doesn't have decay, and it's not true. FEPI does have decay. It's that FEPI hasn't decayed yet because FEPI's underlines are going straight up. A lot of people mistake the difference between the market going down, like what's happened to Tesla, and actual real erosion. And these kind of funds, they have different bad things. But so on that, but to answer your question, I think you'd be good with any of those. FEPI has 15 stocks and YMAX has 22 stocks, and all of the 15 are part of the 22, I think, or maybe all but one of them. So they're virtually the same. Just go with whichever company you like better. Look at some other stuff. Maybe look at expense ratio. Maybe look at the consistency of the payouts. Now, YMAG, I'm going to say what I know, even though I haven't studied it. YMAG only has 7 stocks. So it's going to be more volatile just by definition. It's going to be up more in a good year, most likely, and down more in a bad year. I mean, there's nothing wrong with that one either. So I would say that FEPI and YMAX would be the safer of the ones. But YMAG, like if you wanted to really roll the dice and you wanted to concentrate just on those 7 stocks, because YMAG is, yeah, just 7. That's right. Yeah. So, that's what I would say. But also if you're going to get 22 stocks like you get in FEPI, or what, FEPI has 15. If you're going to get 15 stocks, get 100 to get one of these NASDAQ funds. These NASDAQ funds are good. What about, I know people don't like the one I like. I get that. But what about QQQI? That's a good one. All right, Retired Cop, what's going on? Let's see what you got here going on. Yeah, Retired Cop, I enjoy you getting on here and making comments too. Lots of times I don't have anyone to talk to that I know anyway, because lots of times I don't advertise these. I just jump on and start talking. I was doing that especially a bunch last month. I quit doing that so much because I kind of got some shit for it. I was getting some not so nice comments. Anyway, but I think the channel's got better lately. I'm trying to keep the reports shorter, but I do like to come on at nighttime where I can actually talk about charts and we can have discussions. So if I haven't told you guys lately, I appreciate you guys. Let's look at the market one more time. Let's see if it's moving. I'm going to put it back on. We aren't. Here's what we're going to do. I'm going to put it on daily. I like to, we're going to look at everything one more time on a little bit longer perspective. Like on a longer perspective, okay, look at Amazon and my bull wedge. On a bigger perspective, this is nothing. This is just going from one side of the Bollinger Band to the other side. Now they're over sold. Now somebody, and probably will, dip buyers will probably come in like they did last time they were down here. I don't know. I'm not recommending any trades in Amazon. I love to look at trades and chart patterns and stuff. But anyway, let's just go through these all on the daily. Daily's a different deal. Okay. On the daily, it's such a strong signal to me, a bullish signal whenever on the daily, whenever you're at least in the top half of the, above the middle line. Now, the middle line on my Bollinger Band is the 20-period exponential moving average. And a lot of people use the 20 EMA. So so my Bollinger Bands also have the 20 EMA. The 20 EMA is just the middle line. Anyway, to me, that's a great place to look for pullbacks to buy and to look for the trend to continue and stuff. Anyway, my point was when we get above it and trade above it, we're trending up. That's great. Market's been great. We pulled back to the middle line. Tomorrow's going to be the test. But if we get underneath it, like we did back here, and start trading underneath it, then the market will probably start trending the other way. Nothing we can do about it. I just like to watch it. But also the middle line, more times than not, acts as a good place to maybe buy the dip, with options for maybe a week later, 2 weeks later. I mean, anyway, and I'm not recommending anything. All right, guys. Well, okay, let's see what else is. Okay, so we'll look at that. That's S&P. That looks the same. Russell. Now, Russell looks the weakest by comparison on the daily chart because it's already touched its bottom Bollinger Band, but then it bounced. Okay, so here's USO, which is oil. I wondered what that fund would have made when oil was blowing up back here. And, look at this back here in March, just going up every day. Let's look at here. Stick with me just a second here. Maybe you guys will like this. Okay, OVX. This is oil volatility, and I was meant to put it in a different pane. Move to new pane below. All right, so yeah, so this is oil volatility. So definitely back here when it was actually going up every day, volatility was actually in the dumper. You can see it was really low. When it actually started coming down from that peak, that's when it started blowing up again, and it went from 25 where it sits now, or we're at 29 on a oil volatility. This is oil's VIX, but anyway, we'll keep an eye on this. And I think this one's going to be a fun one though. Anyway, okay. Sorry to get sidetracked on that. That's oil. There's a bond VIX too, but I won't show it to you. I'm just going to get rid of the oil VIX. All of these things have a VIX. You guys don't even want to get me started on the VIX. let's look at, but real quick, let's look at the daily on the yield max funds like Coinbase and stuff. You could now like look at that. I'm always so zoomed out. I have no idea that is, you know, really strong looking. I mean, I know that's like no shit, Sherlock, but I just lose track of the strength or of the weakness. That is really weak looking. I mean, and because it's been getting, you know, drilled since July of last year. I mean, it got driven all the way from 300 to 150, basically. I mean, oh my gosh. All right, the profit boxes make it a little hard to see when it's congested with the Bollinger Bands, but you can see this is just, this one's grinding, consolidating, whatever you want to call it. There's some AMD, there's some NVIDIA. Wow, look at that. I mean, even when I'm on the zoomed in chart, I do realize how strong this one is. This one's strong in whatever time frame you look at. It doesn't matter. This one's strong in whatever time frame you pick. Check this out. Let's check out a little monthly NVIDIA. Look at this. Oh, you think that's some strength there? Get you 100 shares of that in 2020 at 70. And remember, in 2020, it was absurd. It was going up because of everyone stayed home and was playing video games, and everyone was riding Pelotons, and they need these chips in Internet of Things devices. Remember all that? And it was crazy too high then. And then it ran from 70 to 337, and that was the bubble. I mean, that was it. That was done. You know, and no, it pulled back to 100, and that's a buying spot. Now we're at 1,000. I mean, this thing's absolutely insane. All right, guys. Let's look at Mr. I bet it looks similar. Okay, now remember, we're on monthly charts here, but oh my gosh. Let's look at Amazon on a monthly chart. Okay, well, Amazon not as impressive. Well, yeah, yes, it's impressive. It is impressive on a monthly chart. Not as impressive since 2020 for sure. But on the monthly chart, you know, 2010 was the year of Amazon. You get it around, what, $4, $3? It's at 180 right now. That's a 60 bagger. Holy cow. Yeah, growth assets. That's why I was saying earlier, my special earlier, I forget, it was that one tonight. It was about needing income versus wanting income. But anyway, it's important to use these things right. When you need income, you know, the yield funds or a bond fund or a real estate investment trust or some type of fixed income investment can work for you, but only if you need income for something. If you don't need income, you're almost always better off buying a business. A business is more like a growth asset, you know, investing for the long term, you know, and not worrying about trying to extract money out of something. That's what you do when you're older after you've already made your money. All right, I will stop filibustering. I'm going to check one more time for comments, but I appreciate you guys. Hey, what's up, car guy? I haven't seen you around in a while. I got IWMY and QQQY. I got 100 shares of each. You got 9,000 shares. Okay, well, what did you think about that? A retired cop. What did you think about that? Where the hell are you retired from? Beverly Hills? I'm just joking. I'm just messing with your target. What did you think about the dividend today? Were you disappointed? I mean, it was their lowest one in a while. You probably didn't catch the first. You just got on, but I'm sure you've heard the news by now. Anyway. But yeah, congratulations on having 9,000 shares of IWMY. That is good. That is good. Let me make sure there's no questions I've missed here. Yeah, I mean, I didn't mean to knock Roundhill, you guys. I was just, but there, you know, so here's the deal. I guess Roundhill, if I were putting together a portfolio of these funds, and I will be eventually, right now I just have 3 of them. I could see having Roundhill in the fund also. So maybe you would catch some overnight NAV, maybe using some Roundhill to balance out some SPY-T, using them together. but they're both going to, I don't know and like I said, I'm not looking around the hill. And there's some people need, if you need to reinvest weekly, if you have something that let's say you have a taco truck or something and you can make money, put money out on, you can make money or whatever if you need the money to invest in something else, yeah, go for it. I just don't need monthly money. I mean, weekly money. I need monthly money. All right, Car Guy, you have both. You were hoping to be above $1 retire cop. Yeah. I mean, maybe next month. I'll show you something else that kind of disappointed me. It was just disappointing the way the month ended up for IWMY. I mean, it was murdering it right through here. Look at the running total of cents per share, 18, 25, 19, 26, 2 weeks into the month, 26 cents a share up, 34 cents a share a few days later, and then 53 cents a share is just killing it. Then we got to 55 cents a share, and then we hit 3 losses in a row. And then another one. I just, if it wasn't for those losses at the end of the month, tomorrow I'm going to have a show where I'm going to figure out the exact amount that you need to put in to defend the NAV. I'll figure out what they paid, and then, we could do it right now, like on line. All we do is like on JEPY, 54 cents or something, or whatever. So whatever they paid, you subtract this 4 cents what they actually made. So you would need to, if you're using this method. Now, I made a video about it today where I was talking about true yield. I'm not going to get into it now. There's multiple different ways and metrics ways of defending the NAV. The most common one that I like and espouse all the time is just reinvesting 2/3 of the dividend. But there's multiple other ways to do it. So another way to do it that I did not mention in that video is, and I made 2 videos on true yield also, is just watch my show, look at the actual earnings, and replace the difference between the actual earnings and but that's one way is just to replace the actual earnings, the difference between the actual earnings and the dividend they give you. In other words, if they give you a dividend more than they've actually earned, you could you reinvest it, and you'll have more shares, and it has the essence of defending the NAV. There's so many easier ways to do it. Here's the most easy, simple way to do it. You buy it at 20. This is the way I'm going to do it. I haven't done it yet. I've got my first 2 dividends and didn't do anything. Anyway, but all you have to do is pick the price that you bought it at. So let's say you bought it on the first day at $20. Okay, so by the end of the 3rd month, it's down to $19, but you have $3 in dividends by then. So you have $3. So you take a dollar out of your bank account and you buy $1 more of shares in this fund. Anyway, you just keep it even that way. You just keep your investment from decaying. I mean, that's probably the easiest and most simple way to do it. But the 2/3 rule is a good way to do it. My true yield is another way of not how much to withhold, but it's another kind of way of thinking about it. If you haven't seen that video, there's a couple of them. Maybe watch that and leave me a comment. Hey, also, I've been meaning to tell you guys, I want to start doing some more social media stuff. So I started a Reddit page and I started a Facebook page. And anyway, I don't always check. I'm not a big Discord person. Sometimes anyway, I need to broaden my horizon. So I'll get those links and post them tomorrow. But I'm going to start trying to do more stuff on Reddit and Facebook, just to see what's out there. There's no reason to. I don't know. No reason not to. I think. All right. What's up, Mike Case? I've been using the dividends to put into SPY and then purchasing at least the dividend back into the fund. Okay, yeah, I see what you're saying. And then redripping at least the I see. But do you guys see what I mean about that? About Do you guys see what I mean when I say you need to? There's a difference between needing income. See, I'm retired and I'm disabled and my house isn't paid off for another year. But I'm an Apple engineer and I have $2.5 million of Apple stock. Well, I need income, so I'm going to sell a couple $100,000 of that Apple stock, and I'm going to buy some SPY eye with it or whatever. And all of a sudden, I'm going to be making 12% a year on it. And because I need that income because I have to pay my house off, and I'm not using it to buy a Lambo. If I need that kind of money, if I'm trying to make, I'm trying to get that kind of money, I'm better off staying with the risk assets and the growth assets. And that's why I see too many people playing these funds like with but anyway, I just if you're trying to do that, if you're trying to make your mark in the world, I just don't think these are the way to do it. I think you need to get some AI stock and buy and hold and find a stock that's 1,000 bagger. You be on the cover of Forbes someday or something. But these aren't going to do that for you. These are for after you've done that. I mean, or after you've done something. Like I say in the example, maybe you're retired and you actually need it. Maybe I'm retired and I have a kid that's disabled, that's still dependent. They're going to live with me forever. So, I mean, I'm just saying that's a good use case for these funds. But it's not a good use case if I'm 30 and I want to try to make $100,000 real fast so I can buy a Lambo. I mean, that's fun. If you want to do that, more power to you, but go find an AI stock or something. Don't try to do it with these. I don't think they're going to get you there. All right. Speaking of stuff, I was talking about Lambos. We got Car Guy here. All right. So what were you saying, Car Guy? I'm putting everything back in for the next 2 years until I retire. It's been fun. Thanks to Max and the good YouTubers. Yeah. Well, it's been fun getting to meet you guys also. The good thing about you guys that are close to retirement, or even somebody like me, is maybe kind of semi-retired, if the market's, the market's been really bullish for 6 months. Likely it's going to continue because of the presidential election year, and then we'll have the Santa Claus effect. So if we can get another year after that, for these people that bought a bunch of these really heavy, like a year ago, and are just trying to get a couple of years of, if the market will just cooperate, then what you'll see, a lot of people will use these to trade, to try to make, and they'll be doing, and they'll do well if the market will cooperate, because even though it's a yield fund and it's safer to some extent, and all this stuff, because it's less volatile than the market, because of the yield and stuff, you're still playing the market. So you just have to be aware it's still a bullish bet on the market. That's why the thing I'm probably more excited about than anything is inverse yield funds. And one of them is not going to cut it. One of them, but when they're going to come out with when they come out with an inverse alti, like a whole fund of high volatility stocks, but the inverse. Okay. Then what a person's going to be able to do is buy alti and buy the inverse alti, and you'll have all these different stocks, and you'll be making money, and you should have the NAV should totally cancel each other out. Right now, you can do it with Tesla and crash a little bit, but still, if you have a big move in either direction, you're going to be capped, and it's not totally going to protect you because it's just one stock. When they have a portfolio, or let's say they put a YMAX out and they have a bearish YMAX, I'm really excited about that, because all I want is free money. All I want is money without risk. I hate risk. I want to know that I'm going to make money. I don't want to risk money. And I would even take a lot less. I don't have to make 60% if I know I'm going to make money. I'd take way less. Anyway, so I think we're getting close to that time where it's going to be very easy. They call that statistical arbitrage. And I've been trying to figure it out for my whole life. But anyway, but statistical arbitrage is fascinating, but it's always been something that banks and billionaires do, but we're getting pretty close to be able to do it ourselves. Anyway, and I'll be talking about it a lot because that's kind of one of my little obsessions in life is I want to beat the market with ratios. There's a ratio out there that it doesn't have to do with buying or selling. You have to know to buy 2/3 at the same time you sell 1/3 or whatever. I swear. I mean, I know there's ratios out there, and that's how these people, a lot of these people are beating the market, the quants. It's ratios. They aren't taking any market risk. They're just, it's financial engineering. Anyway, I am fascinated with it. I hope you guys are as well, because I like to talk about it. Anyway, I appreciate you guys. It's been an hour live stream. I was trying to get my watch time up, so I wanted to have a live stream, but thanks for listening to me, you guys. I'll let you go. I'll see you in the morning. I'll be here about 8:30 with the morning update. We'll look at the profit boxes and all that kind of good stuff. All right. Take her easy.